Hello everyone, and welcome to Alpha Bank's 2023 Investor Day. I'm Vasilis Psaltis, CEO of Alpha Bank, and I will be sharing with you the vision, the strategy, and our business plan for the coming years. Alpha Bank has a great history and record achievements, and I hope that by the end of today's session, you will have a good understanding of our strengths and competitive advantages, our latest achievements, the macro environment in which we operate in, but most importantly, our priorities and the drivers of value creation going forward. My executive team is joining me for our deep dive. Before we begin, a brief word on housekeeping. We will start by looking at the overall strategy and the key enablers of our business plan. Then the heads of our four main business units will deep dive into the plans of each respective business. Our CFO will then talk about the financial targets, and we will close with a 45-minute Q&A session. The event is expected to last about 3 hours, and we will have short breaks in between the four pillars. Creating superior value for our shareholders and empowering our customers for growth is our foremost mission. And we have a solid track record on this. We are the market leader in wholesale banking, and we are the bank of choice for the affluent customers. Trust is our most valuable currency, and we enjoy strong customer relationships and partnerships that fuel our growth. We are fortunate to operate in a favorable macroeconomic context, especially considering the current political and economic dynamics for Greece. We have an ambitious plan for the next 3 years, aiming to grow our earnings at an annual pace of 20%, delivering a return on tangible equity above 12% by 2025, while generating nearly 2.3 billion of capital throughout the period. Let us now explain how we plan to get there, starting with an overview of our franchise, who we are today, and what is our way forward. We are the relationship bank of Greece. This is our DNA, and in the eyes of our customers, we are reliable, resilient, and humane, differentiating ourselves from our peers. A leading bank for trusted advice, expertise, and professionalism, which is reflected in our market positioning, as we are the #1 in wholesale lending, in mutual funds, in credit cards, where we operate the longest standing and most popular loyalty program, and we have the best private banking offering in the country. The trust that our customers have in our bank is also reflected in the customer satisfaction scores and is evidenced by the tenure of our client relationships. We are proud of our unique heritage, built on nearly 140 years of history, as the oldest privately owned bank in Greece, with a mindset to deliver shareholder value. We are the only company listed on the Athens Stock Exchange to consistently distribute dividends to shareholders for nearly 60 years, until the onset of the Greek crisis. Even during the years of the crisis, our entrepreneurial mentality led us to minimize any support from the state. We repaid fully the state preference shares through our own means, setting the benchmark for the sector's investability by attracting billions of international investments on numerous occasions. We work as one team, and the culture and quality of our brand are reflected in our people. We are an inclusive company whose employee relationships are based on mutual respect. This has led over the years to high level of employee engagement and, especially in recent years, the ability to attract and retain talent on the back of a fully revamped HR proposition. We serve over 4 million customers. Wholesale is our biggest profit-generating engine, followed by our wealth and retail business and our international operations in Romania, Cyprus, and the UK. We have close to 8,500 employees, 6,000 based in Greece, operating a balance sheet of over 70 billion, with 39 billion in loans and 50 billion in deposits, posting a profit after tax of nearly 400 million in 2022. In the last 4 years, we have cemented our positioning in the market, reflecting our identity and our strength. We have laid the foundation of robust profitability by delivering over 15% return on our performing operations in Greece. We have reached a nearly 26% market share in lending to large corporates and small and medium enterprises, and a 30% market share in assets under management. We continue to make our retail network, the first network in terms of productivity in Greece, even more efficient, whilst maintaining our market share in core segments and mass products, building on our digital capabilities. And in the international arena, we have reignited our engine in Romania and are experiencing strong growth, in line with or even ahead the prevailing market trends. With our bold transformation, we targeted profitable growth in key segments and achieved tangible results. We met the bulk of our targets, achieving returns of over 7.5% on tangible equity after years of crisis, and positioned the bank to remain on track to deliver on the rest. This is the result of a targeted and intense management effort over the past 4 years. We launched a large-scale transformation for the bank across 4 priorities. We set as our first priority to restore our balance sheet. We succeeded in reducing our NPE stock by nearly 23 billion and our NPE ratio by nearly 40 percentage points. This was not simple. We achieved this by executing some of Europe's and Greece's most notable transactions in partnership with well-known international investors, but also through our efforts on organic NPE reduction. Our second pillar was to revamp our commercial engine, fueled by the share capital increase we completed in 2021, securing 800 million. This was used to fund our expansion. We have focused on profitable sectors in wholesale banking and delivered an all-time record growth in 2022. And we did not stop there. We completed strategic business development initiatives and partnerships in the payments with Nexi, in insurance with Generali, but also in real estate. As a third priority, we adopted a leaner and more digital operating model enabled by bold actions such as the carve-out and simultaneous outsourcing of the servicing of our non-performing exposures. We optimized our network whilst maintaining our market share in critical product areas, and we enhanced our digital capabilities by nearly 80 million per annum of IT and digital investments over the last 3 years to stay up to speed with evolving user demands. The last pillar is very important for me. It reflects the desire of our people, our customers and stakeholders to modernize further our culture, solidifying our strengths for a better future. The transformation program we launched in 2020 was one of the main levers that helped us change the bank. The Greek economy has demonstrated remarkable resilience in the last 3 years, overcoming 2 crises and transforming rapidly on the back of a program of structural reforms. The ongoing transformation is accelerated by the large inflow of EU funds that provide a unique opportunity for revitalizing the Greek economy and transforming its productive model towards investment-led growth. Furthermore, the country has robust public finances. Greece reduced its debt-to-GDP ratio by almost 18 percentage points since 2019, the largest decline in Europe, and it holds one of the most sustainable debt profiles in Europe. Investors and businesses have regained confidence in the Greek economy. Greece gained 16th position in business environment ranking, the largest jump among 81 countries, and the spread against the German 10-year bond has compressed by nearly 50%. This was all accompanied by one of the most significant banking transformations in recent history. The combination of favorable debt dynamics, gains in confidence, a sound banking system, and political stability has put Greece on track to return to investment credit grade in 2023. But even before the return to investment grade, we see strong fundamentals that drive banking demand in the market. Employment and individuals' disposable income have been improving at a steady pace, driving an increase of savings that manifested in household deposit balance growth, whilst the real estate market has proven to be resilient. Digital awareness in Greece is increasing on the back of the acceleration imposed by COVID, supporting the digitization of banking services. Foreign direct investments have been growing at about 17% per annum since 2019, and we expect investment to continue growing. The Greek economy has been posting convincing signs of competitiveness improvement in the global trade scene, with exports growing significantly faster than the GDP. All the above set the scene for sustained, robust macroeconomic growth in Greece. Real GDP is expected to grow at nearly 3% per year, a faster pace than the EU average. Labor market is expected to continue improving, with the unemployment rate dropping to approximately 10% in 2025. median disposable income and house prices are expected to continue their steady growth between 3 and 4% per year. Our international subsidiaries equally operate in positive macro environments. In particular, Romania stands out as one of the fastest growing economies in Europe and one of the most attractive and profitable banking markets to be in. We are confident in the outlook for the Greek, Romanian, and Cypriot economy. The growth in these countries is driven by structural trends that affect profoundly the demand for banking services. This is more pronounced in segments where we are traditionally strong, such as business and individual investments. We believe we are uniquely positioned to capture these trends, and we have structured our strategic priorities accordingly. By now, you have a better understanding of our identity, of our achievements over the last 4 years, and the environments we operate in. This is time to look ahead towards our purpose and strategy. We share with our customers the desire for a better future, a more sustainable world in which businesses and individuals can thrive. I am proud to disclose to you today our new purpose, the basis for the new Alpha Bank and the North Star in the way we operate. At Alpha Bank, our role is to stand with our customers, recognize and trust their abilities and goals, and connect them to new opportunities and partnerships to help them realize their ambition. Alpha Bank's purpose is to enable progress in life and business for a better tomorrow. All our priorities going forward will be delivered from this purpose. Designing experiences, not just banking products for our customers, is based on a deep understanding of their real needs, and we can deliver them based on our trusted partnership with them. Being there in the most important moments of their lives with relevant products and offering them expert advice helps them to seamlessly integrate finance in their lives. This is the way we are enabling our customers to grow with us. With that in mind, let us move to our strategic plan and allow me to give you some perspective on how our priorities have evolved over time. The beginning of my tenure as CEO was marked by a period of heavy restructuring. The focus was on restoring the balance sheet and fixing the fundamentals of our operating model, deleveraging problematic assets, and exiting non-core businesses. Shrinking our balance sheet has drastically impacted our revenues. Hence, our attention shifted to top-line growth, which was supported by a favorable macro environment. Cost rationalization and the normalization of the cost of risk resulting from the first phase of our work allowed us to reap the benefits and contributed to increased recurring profitability. By the end of this year, we will have achieved our target of 10% return on tangible equity, and we will be looking forward for even higher financial performance and increased sustainable returns to our shareholders. The whole management team is focused on swiftly improving the structural profitability of our business units. To that effect, we will continue to invest in our people and our digital capabilities. Increased profitability and capital discipline is expected to lead to significant capital creation, which will be used to support expansion of our balance sheet and to distribute value to our shareholders, subject to regulatory approval. In terms of financial targets, we aim to deliver a return on tangible equity above 12% by 2025. Earnings will be on upward trajectory, with EPS growth of more than 20% on an annualized basis for the period 2022 to 2025. We plan to generate 2.3 billion of regulatory capital throughout this period, thanks to a faster than the market earnings growth and conversion of our DTA stock. All this will allow us to gradually resume dividend payments starting from 2023 profits, following a relevant dialogue with our regulators. Let's now talk about our profitability outlook. In 2022, we closed the year with a return on tangible equity of 7.6%. This year, we are targeting 10% on the back of a solid first quarter and ongoing tailwinds in the operating environment. For 2025, we expect a further increase of our return to tangible equity to more than 12% on a tangible equity of more than 6 billion as a function of higher profitability across all of our core business units and better capital allocation as we convert DTAs that are currently not part of our regulatory capital into profits. We will discuss business drivers in more depth later, while Lazaros, our CFO, will speak more about capital allocation and efficiency in his presentation. The improvement in profitability and over 20% annual growth in earnings will allow us to generate just under 2 billion of net profits in the period. Alongside the conversion of deferred tax asset, this will allow us to generate 2.3 billion of regulatory capital throughout the plan. Part of that, circa 900 million, will be deployed to fund growth during the period. However, the vast majority, about 1.4 billion, will still above the minimum levels of capital that the management considers as necessary to operate the bank. Our financial projections currently include some accruals for shareholder remuneration, with annual dividend distribution at circa 30 basis points per annum, having been put as a placeholder in our business plan subject to regulatory approval. Following the appropriate discussions with regulators and shareholders, we have every intention to increase the amount of capital to be returned to our shareholders. To achieve our ambition, we have identified 6 distinct strategic priorities that leverage our strengths and work on areas where we want to improve our performance. This plan will be enabled by our investments in people and digital. Let's start with retail, where we plan to more than double our profitability. Isidoros will share some detail later. We will fully digitize everyday banking needs, which should free up time of our people for them to allocate more time on commercial matters. This means upgrading the servicing for nearly 500,000 of affluent and emerging affluent clients, for instance, by extending wealth advisory services. In practical terms, focusing more on commercial activities means growing the unit sales per employee by circa 40%. In wealth, we aim at double-digit annual growth rates for asset balances and revenues, driving profitability. The key goal is to address a wider customer base, scaling our wealth engine and customizing our investment propositions to all segments, such as the introduction of light discretionary services for first-time investors. We are aiming to increase investment penetration in affluent segment by nearly 19 percentage points. George will articulate further in his section. For wholesale, our plan is straightforward: to leverage our leadership position to capture the potential of the Greek market while maintaining our robust profitability. Yannis will walk you through his strategy, which will allow us to continue supporting our customers with approximately 14 billion of cumulative disbursements. At the same time, we plan on growing our service business, enriching our product palette, and launching targeted commercial campaigns. On our international business, which Sergio will describe more in detail later, the objective is to improve the return on deployed capital. We will focus on Romania, where the opportunity is greatest, and will play to our strengths and leverage the newly launched platforms to grow our top line. We aim to maintain the resilience of our balance sheet, acting mainly along 2 vectors. On lending, we continue to focus on growing our book profitably by being disciplined in pricing it in a risk-adjusted way. At the same time, we will take our NPE ratio down to circa 4%, mainly through organic levers, allowing us to increase coverage to approximately 60% without impacting our cost of risk. Secondly, we maintain strong levels of liquidity by expanding our diversified, granular, and sticky deposit base at circa 3% per year. Finally, allow me to say a few words on sustainability. We will leverage sustainability as a value creation lever. We have started a journey in 2019 to progressively integrate ESG in our business strategy and operating model. For 2023, we aim to become the first Greek bank to join Net Zero Banking Alliance, completing the full measurement of financed emissions and defining science-based targets for our operations and portfolio. We defined some preliminary targets that we aim to articulate further later this year. Firstly, we commit to supporting an environmentally sustained economy, allocating 3 billion over the business plan period to green lending, of which 1 billion for renewable energy investments. Secondly, we want to be leaders in supporting diversity and inclusion both internally and in the society. To this end, we commit to maintain our leading gender 40% representation in the board of directors and the management. Thirdly, we will continue to guarantee a robust and transparent corporate governance, maintaining the independence of our board of directors and incorporating ESG criteria in the remuneration and risk management framework. Our strategy is closely linked to the UN Sustainability Development, and we set goals which we are proud to support as longtime members of the United Nations Environment Programme Finance Initiative. The plan hinges on two critical enablers: people and digital. We have a clear strategy for each of them. Before wrapping up this section, let me summarize what I think you should keep as Alpha Bank's differentiating proposition. Our starting point is based on our identity, our execution track record, the quality of our platform, and the positive outlook for Greece, Romania, and Cyprus. We have ambitious targets to reach at least 12% return on tangible equity by 2025, a performance that is even more impressive if one considers the unutilized DTA we still carry on our balance sheet. We expect to generate more than 2.3 billion of capital to fund our plans and create value for our shareholders. And finally, we have set ourselves very transparent strategic priorities enabled by robust investments in a solid plan for people and digital to deliver superior value for our shareholders. This latter point will become evident when you listen to Isidoros, George, Yannis and Sergio on each of their respective areas.